Hello everyone, welcome to the Ichimoku charts.com daily analysis for gold for Tuesday, April 23rd, 2013. Well, a continuation of the trend to the upside today, and a candle that's made a lower high but a higher low. So in bar chart terms, this is an inside day, and very much a candle of indecision, and the reason why this is indecisive is that the buyers haven't been strong enough to maintain the series of higher highs and higher lows that we saw for the previous few trading days. The lack of the market trading above the previous high suggests that the buyers have lost some commitment, but by the same token, the sellers failing to take out the low of the previous candle suggests that the sellers have lacked some commitment too, and little wonder that the sellers lack commitment today. 1400 round number level of previous resistance and now support is very close by to that area around that previous low, and we have seen some upside price rejection from there today. Now, this indecision even extends to a potential a potential candlestick reversal pattern, and we have an uptrend in place here, a series of higher highs and higher lows. We have a white body, and now for today's trading, a black body that's within the previous black body, and it's a potential bearish harami pattern, and that's where we have this previous body extending beyond the boundaries of the body of the current candle, or where the body of the current candle is within the boundaries of the previous body. And it's all about the market lacking upside momentum now, and that's why we have this potential bearish harami reversal pattern. Now, with this pattern, we do require confirmation. As with all Japanese candlestick reversal patterns, confirmation is crucial, so we will be looking for a lower high and a lower low. And the problem here is, however, that confirmation may not come because of this round number support at 1400. 1400 will be crucial to this market for tomorrow's trading, and at the moment we are seeing buyers coming in as this current candle is developing, but certainly the area at the 1432 level, which is held as resistance for the previous two trading days, will be important as well. So we have a market that's really trying to make up its mind. If we do see sellers come in, then we could quickly see the market testing back down to the 1329 level. If we see buyers coming in and a breakout up above 1432, then we have targets around the 1448 level and 1462, but really a lot of overhead resistance for this market. In terms of the current candle, it's a black body, and it's been a while since we've seen a black body, and that does suggest that there has been a change of sentiment back towards the sellers, so that does strengthen the idea that there is potential for a change of trend back to the downside. Looking at where this market is closed within the range, the sellers have taken back control of this market. They had weak control of the market for the previous few trading days, but the control that they have is only very, very weak because it's only just down below the midpoint level. But with this black body, the sellers have found some downside momentum in terms of net effect between the open and the close, so a net swing back to the sellers for today's trading. Now, in terms of the Fibonacci extension, and we're examining the relationship of the first time frame uptrend that the market remains in, and comparing that to the previous time the market was trending up, and we saw the market trade through the 161.8%. Our target was the 261.8%. We are now seeing negativity come into this market. The buyers are not following through now. The sellers are attempting to take control of this market, and it does suggest there is potential for a change of trend. But if this uptrend does continue, we do need to watch the 261.8% around 1554. That is the next target level based on this Fibonacci technique. In terms of the Fibonacci retracement of the previous downtrend, and previously we saw the market close up above the 38.2%. It was moderately bullish, but today now we've seen rejection from above that level, and this does suggest that there is potential for a change of trend. The only problem, as I've mentioned, is 1400 round number support is very, very strong. We may not see that change of trend. In terms of Ichimoku, obviously a bearish market in all three timeframes. We have the market trending down below the cloud, so a bearish bias in the long-term timeframe, trending below the Kijun-sen, so bearish in the medium-term timeframe. That Kijun-sen is still pointing flat, so there's still a good possibility of price action continuing back up there, and price action tends to be attracted towards a flat Kijun-sen. And the market is trading down below the Tenkan-sen, so we have a bearish market in the short-term time frame, and the Chikou span here is well below the corresponding price action, so confirming the negativity that we're seeing in the market. Now, with the short-term dynamics here favouring the sellers once again, this does suggest that there is good potential for this market to trade back in line with these higher time frames and trade to the downside. Obviously 1400, as already mentioned, is crucial to this market trading lower. If we do see solid bearish activity down below there, 1380 will provide some resistance support, but the area down around 1329 is a very real target if we see bearish activity down below 1400.